Welcome back. So today is video number 8, and today we're going to be focusing on
Cogs.
Cogs, cost of goods sold, right? Now, pretty much every business has cost of goods sold, whether you're a service-based business, a SaaS, or let's say a manufacturer. And depending on the persona of the business and the business model, how you build cost of goods sold is going to be idiosyncratic to that business model.
Yep. You either probably have some sort of fixed cost in there, right? If you have people, customer success people, onboarding, or you'll have some type of variable cost of goods sold based on what we just went through in your revenue model.
Exactly. So back to basics. We started in, I believe it was video number 4, we talked about staffing. In video number 5, we talked about custom tables, and then we went on to revenue. I think we even talked about operating expenses. And now you're starting to see, why are we walking sort of backwards when the P&L shows revenue, cost of goods sold, gross profit, and operating expenses? Well, because the cost of goods sold is probably one of the last things because it is a function of revenue, for example. It is a function of staffing. So if you're a service-based business and you are delivering your service through people, then you need to understand what are my revenue goals and what is my hiring, staffing roadmap. Those two pieces, they actually build your cost of goods sold. You build your cost of goods sold based on those two tables. So you got your custom table, you got your staffing function, and then you got your revenue function. Now, let's talk about a manufacturing, right, which is a little trickier. Even on Excel, it's not the easiest thing because you have to consider product build, fully landed costs.
So this is the beauty of Jirav, and this is the value for a lot of your clients, is the ability to build into that back end with the custom tables that we went through, right? You should have been able to kind of figure out your unit sales in the custom tables because that flew into your revenue. And now we have the baseline.
And then in your custom tables, you also have your product build, right? You've got your assumptions. And now those 2 or 3 things, they begin to build out your inventory on your balance sheet, because from inventory, you bring it into cost of goods sold. But let's face it, when you're modeling, you're not really thinking about it that way. You're thinking about it as a function of what are the underlying levers, drivers that are creating these cost of goods sold, right? So you can't really look at building out cost of goods sold in financial modeling through the lens of debits and credits or GAAP, right? It's got to be through the lens of what is actually the underlying driver of my cost of goods sold. And so with that, we're going to walk through, this will be a short video because cost of goods sold tends to be the last thing. And guess what? Most of the stuff already built, right? You're just kind of representing it on the P&L. And then later on, we'll talk about how it impacts cash flow and your balance sheet. Because again, and with cost of goods sold, unlike others, you have to buy the material, book it on your balance sheet, right? Debits and credits, right? You book it on your balance sheet, and then it flows into your cost of goods sold as you recognize the revenue. But that's not how you build this. So, Corey,
we'll go through a couple of things today with that. We're not going to go into the balance sheet. That's going to be in one of our later videos, so stay tuned for that. But we're going to go through the allocations, how to connect it from the custom tables to your actual P&L, the Cogs section. And
actually, that's a good point, right? Because if you are a staffing centric driven revenue business, then you already have your staffing, and now you've got to allocate the cost of labor not to your operating expenses, but you got to shift it up to your cost of goods sold. And Corey, I think that's one area we're going to focus in on this next section of this video.
Absolutely.
Thanks, everyone.
Thanks.
Hey, everyone. Thanks again for watching. If you're enjoying this, please do me a favor. Like it, comment, and subscribe. Appreciate it.
At this point, you've probably built out your revenue. You hopefully have your custom tables set up and some of the back-end settings set up for your account. And now we're going to move on to the cost of sales. So your cost of sales, or your COGS, are most likely probably directly tied in some form or another to your revenue, hence why we started there. Now, once you've built out your revenue, you'll probably have a great idea around how many units you're selling, what the capacity requirements are, etc. So in this method, we're going to talk a little bit about some of the alternative ways that we can build out that cost of sales, A, and B, allocations. So if we go back here to that Sales Direct tab, custom table that we talked about in the previous video, I'm going to use this as an example. In this demo account, we don't have a custom table solely dedicated to COGS. We build out COGS in a different way, which I'll show you. But in this way, pretend that you have that COGS built out here, right? You maybe have the buildup. If you've sold a specific number of units, you have the breakout in the custom table on what the cost to build those units what it is, right? Or maybe you have an inventory purchasing schedule, right? When is the inventory happening? Think about this both on the cash and accrual basis. In our scenario right here, if I go over to the P&L cost of sales, we simply have it as a percentage of revenue, right? This may be one quick way that is a common way that you see some of your customers wanting to build out their cost of sales, right? They just know their gross margin, and so they're going to build out COGS as a function of a revenue percentage, right? That's what we have here, this percentage of revenue. It's the sales and marketing department revenue times a payroll assumption on hosting fees as a percentage of revenue. Now, another way that you may want to do this is direct labor, right? Or some form of labor. Well, if we take a step back to one of our previous videos, you may remember back here in the company settings, we set up this salary expense, right? And as a recap, this salary expense is where all of the wages go, regardless of their role, position, or department. From there, once they're in this main account, then you do allocations to pull them out of this main account and into the accounts that you wish to see them. So in order to do that, coming back to our Cogs example here, in Cogs, we have a chart of accounts called direct labor. Currently, there's nothing in this, and so we're going to do an allocation. That is not going to be via a driver right here. That is actually going to be via the drivers tab right here at the bottom left. Once I open this up, if we scroll down, we'll have an allocation section. This allocation section is going to be where you do the allocations for payroll on all of your accounts, regardless of whether it's COGS or OPEX. So if I add a new driver here, we can title that later, but the allocation in. Allocation in is the account that you want to point the funds into. So in this case, we're going to be selecting the cost of sales and direct labor. Now note when I pull this open, you can only select P&L accounts. You're not doing a custom table or a balance sheet because remember the custom tables live separate to the P&L and balance sheet. They're their own unique sections. So in this case, direct labor, allocation out. My allocation out is going to be my operating expenses, and it is going to be my salaries and wages. Remember that main account. Now, this is where you're going to want to use departments. So you can only allocate labor based on department, not so much based on role. So in this case, let's just say I want my operations. I'm going to select that operations department, the allocation amount. Once again, I'm going to go down here. So this is the amount that you want to pull it out of. So remember, as a recap, we put all of the wages into this salaries and wages account. I want to pull them out of that salaries and wages account, but I want to specify by how much. So here I'm going to choose the salaries for, once again, that sales and marketing. And if I want to select the specific role, or if I just want to select a general role for all of them in that ops department, I can do that. Right now I'm going to do support. I'm going to pull out that amount. And I'm just going to do it times a constant of 1. Note right there, you can copy and paste across drivers. If I go back over here to my cost of sales tab, you'll notice that this begins to pull in that allocation driver. Now from here, I can edit that driver, but remember that I cannot build one in this tab. I have to go back to that drivers tab on the left-hand side. So that's how you allocate labor into this. And once again, as you begin to build up the staffing, whether it's staffing drivers, new manual hires, those will automatically, assuming you've done the allocations on that department or that role, those will automatically flow into this P&L. Now, some other ways would be similar to like what we saw in the last video, right? You've built it out in the custom table and you need to link it, or a percentage of revenue, or a growth on historicals, or maybe you have a very fixed cost of sales, right? Maybe you just want a constant, or maybe you just want to hard code it, right? There's all those different methods. And refer back to our drivers video that kind of outlines different types of drivers, but very similar to revenue, it kind of ties back to your custom tables, staffing, allocations, or hard coded and custom drivers. If you have any specific questions about your use case, feel free to drop a comment below or reach out to us directly.
That was great. So thanks for watching. Please subscribe, leave us some feedback, Also, check out our website, growthlabfinancial.com. Again, subscribe so you can be notified for the next one.